Hello, everybody. Welcome in. Welcome to InvestAnswers TA Tuesdays. This is where we look at real-life charts with real-life examples. Today, we're going to talk about Fibonacci retracements, one of my favorite tools, although I seem to have very many favorite tools, but this one's really important. And I will show you why with real-life examples with Bitcoin, Ethereum, Cardano, Tesla, Google, and Nvidia. So I always like to bring an element of reality to exactly how I operate and what we do every single day. So, as usual, let's just go straight into the content. And this challenge about math, money, and freedom, which is something you will love. So, very happy to hear that. So, again, let's talk about Fibonacci. Fibonacci is everywhere. I always believed as a kid that the universe was controlled by mathematics. And if you dig into the Fibonacci rabbit hole, you'll discover it is uncannily everywhere you look in nature. But the question is, does it work for investing? So let's see. Let's find out. So what is Fibonacci? So Fibonacci sequence is a series in which each number is the sum of the previous two numbers, like 0 and 1 equals 1, 1 plus 1 equals 2, 1 plus 2 equals 3, and so on. It goes on forever. But that's seen everywhere in nature, everywhere in art, even in the human face, and you name it. The question is, how does it work for charts? So the crux behind Fibonacci is the golden ratio. And that is, to me, a fascinating fact. If you divide any number in the sequence by the previous number, the ratio is always 1.618. And that's known as the golden ratio. And that's used by architects and artists and even people with trading. So we'll talk more about that number in a little while. So why Fibonacci retracement for technical analysis? Well, I'll tell you how I use it. The simple way is, imagine you want to get in on a stock, but it's running up too fast and you don't want to chase. So what I do is I wait. And one of the key secrets in investing is to have patience. And sometimes it's very, very difficult to have patience, but it really pays off when you do, because it means you can buy low and sell high in many cases. So what I do is, for a stock X that's run up too fast, and we'll go through 6 examples later, you wait for the price to correct to the Fibonacci retracement levels. And these are 23.6%, 38.2%, 50%, and 61.8%. Now, many will argue that the 50% level is not a real level, but I like it. And I'll tell you why. Because with specific examples, I'll point out why it works in some cases. And sometimes you never know what you're going to get with Fibonacci retracements. And I'll give you also a secret as to the theory as to why they actually work and how you can get ahead of them as well. So let's talk about where it does work and when it does work. So it's effective typically over a longer interval, like 1 month plus, to identify dips or pullbacks on an uptrend, however you want to phrase it, as entry points. It doesn't work well on range-bound markets. I like to use it on things that trend upwards, such as Bitcoin and Ethereum. That's why I'll use them as examples today. But remember, like any other indicator, using it in isolation can be dangerous. But using it in combination with, say, MACD, which I'll touch on today as well, it can be quite powerful. And also, it's very important that you know what's going on in the real world as well, not just to jump in and make decisions based on Fibonacci levels. So, how to draw? Now, a lot of questions I always get from people is, well, how do you do that within TradingView? Well, I'll show you today. But basically, the simple rules are: you find the low, you find the high for the range you're going to analyze, you connect the dots with the FIB retracement tool, and then you wait, and you're patient, and that's the secret. I'll tell you a little story when I get to the Bitcoin chart about this weekend and how I did not practice what I preach, and I still punish myself today. I got in too early. Okay, a quick reminder. What is a trending chart? What is an uptrend, bullish trend? This is when you have higher highs and higher lows. And that little graphic there indicates them. So your lows go up and your highs go up. And that's your uptrend. But the other thing you have to note, and we'll talk a bit about this later as well, is the breathers. And the breathers is what I love, because nothing goes straight up all the time. There's always a rest. Imagine running up a mountain. You're going to run out of breath. You're going to stop. You're going to have a drink of water. Maybe you'll fall back down the mountain a little bit, and then you go back up again. So that's very important to keep that in your minds as well. So let's look at a static example before we go into the real examples. This is Ethereum. What you will see if you zoom in, you're going to see two key levels here. You got the 0.50 and the 0.618. You have the Ethereum chart that has been on a very good upward trend since about the 24th of March, and it topped out around the 16th of April. And then it went down with the rest of the market, but that is my level. Now, the reason this is important to point out is you can see there's clear uptrend with the green line that I've drawn. You've got the FIB retracement patterns, you've got the levels, and then you look across at where the actual Ethereum bounces. So the first time it wicked down and it stopped exactly at the 0.618 level. And this is where I like to place my limit orders to catch. So I place my limit order here at about 1930. People always ask me on Patreon, how do you know how to place your limit orders? Well, this is the secret. So then the second level you can see is the 0.50 level, and it dipped down to that, not once, but twice, nearly 3 times in fact. And that becomes support. And that is your retracement level. And that's how you know to place your limit orders to be able to get in, get a good fill on a pullback. That's temporary. Again, think uptrend is always happening. So let's talk about 2 little secrets as well to bear in mind. One is wait for the candle hammer. That's the green candle, and it looks like a hammer because it actually has a little handle and a big thing on the top. So I'm going to do a separate session on candlesticks in a future video, and I'm going to weave it into how I use a lot of other technical analysis. But it's very important that this green candle, this green hammer, is above the previous red candle. You see the smaller little candle there, and that's very important. Now, with secret number 2 is you've got to confirm with the MACD or RSI, whatever you want. Simple MACD that works well with Fibonacci. Here is, as you've heard in my previous videos, I always wait for confirmation. Don't work with one indicator alone because it can lead you astray sometimes. But when 2 are telling you the same thing, it's a very positive sign. Here you can see complete bounce off the retracement level. And we'll do this live with the chart on Ethereum in a few minutes. And you'll see the confirmation on the MACD histogram turning green, turning positive. And that is what you have to wait for to confirm it's okay to jump in. Okay, so the charting tool as usual, we use today's TradingView. And we're going to look at Bitcoin, Ethereum, Cardano, Tesla, Google, and Nvidia. And before I do, actually, disclaimer, none of this is financial advice. This is just edutainment, as always. First of all, I'm going to show you, talking about Bitcoin, how we operate. So the time frame I'm using is 3 months because here we can see on the 27th of January, Bitcoin bottomed and it broke through that support level. Everybody's saying, oh, it's broken through the 50-day moving average for the first time in a long time. My time frame is an hour. So to draw the Fibonacci retracement tool is real simple. On the left-hand side here, I take the Fib retracement box. I start with the bottom, pick the bottom here, and go all the way to the top, which is right here. And that's it. Now we see the magic happening. The key levels to look at here are the 0.325, the 0.5, and the 0.618. Now, I'm going to look at the 0.618 because you can see here exactly at this 0.618 level, it bounced. And that was the support on the 20th of February. Oh, wouldn't that be nice to buy at 42,500 again? But think about that long term. You know, you hear a lot of people like Willy Woo and stuff, and they talk about levels of support, long-term support and maximum floors and everything else. Some of them use these tools to find that. Now, the second level, you will see here, the second arrow, again, at the half level. Why is that relevant? We'll see. We'll talk about that with some other examples. Then the most relevant one is the 0.382, because Bitcoin's on an uptrend, as you can see, higher lows and higher highs until it tanked. Now, why is Fibonacci important? It's because of this exact reason. First, you can see it dipped and it crashed. And where did it crash to? It dipped and wicked all the way down to the 0.382 level. And then it started consolidating near the 0.236 level. Always had my limits in at 55 and 54K for a long time, but I got a little bit impatient over the weekend when I heard the Ray Dalio news that everybody should put 20% of their portfolio into crypto and Bitcoin. And I was like, oh, this is so bullish. So I broke down my allocation to buy Bitcoin into 60-40 groups. The first 60% hit at the 59K level, and the second one hit at the 55K level, this particular tool at the time. But then again, you can't always be perfect. If I knew it was going to wick all the way down to nearly this 51,000 level from the 0.302 FIB retracement, that's where I used to have my limit orders in, and that's where I have been getting fills for a long time, but I got impatient on Saturday because of that good news. Anyway, enough of that. Let's jump to Ethereum. Ethereum, as I posted early this morning on Patreon, I said it's going to be on fire today because of those big 3 Canadian ETFs. And boy, was it. So let's go to a closer time frame. Same deal as before. You pick the bottom right here. You go all the way to the top right here. And there are your lines. Now let's see how these lines actually work. You have your clear uptrend. We're looking at the 1 month. And for Fibonacci retracements, I always like to look at 1 to 3 months, as I mentioned in the presentation before. We got the clear uptrend with the green line that I placed. And you got the 2 key lines here that I like for Ethereum, the 0.618 and the 0.5. These 2 are very important. Now let's see how it wicks down here all the way to exactly that 0.618 level on the 17th of April. Boom, perfect. Now, what's also very important is the confirmation that I talked about as well with the MACD. And you can see here, it happened. Now, on the second level, where it wicked down to, which became support at the 0.5 level, here we were, 19th of April, 20th of April. It came down there twice and it bounced off those levels 1, 2, 3 times, all in a very short amount of time. And then you know it's extremely strong support. So crypto sometimes is very volatile and can have those big wicks. But again, this is a very, very good tool. So be patient when you're waiting to get in on something that's going upwards, mooning, as they say, and you miss the boat, wait, because there'll always be a breather as you're climbing up that hill. And you can get those fills as long as you strategically place your limit orders to get in. Let's look at Cardano real quick. Cardano will go out to 3 months. Same deal again. You can see the uptrend here from Cardano, the big bottom that I chose on the 14th of Feb, Valentine's Day, coincidentally, all the way up to the 14th of April. Wow. That's just by chance. That was exactly 14th to the 14th. 14th of April was also Coinbase Day. So interesting times, and they're like 4s. But let's look at this chart real quick. And I'll tell you why this is important. We have, again, the 0.5 level and the 0.38 level. You can see that they correspond exactly to bottom wicks right here. As we zoom in a little bit, actually, let's zoom in a lot for this one. And because this is important, I'm actually going to turn this off and zoom all the way in, because what we did today on Patreon, I made a trade alert that I'm normally accumulating Cardano at $1.01. And because of this Fibonacci level, I was confident we weren't going to see that again. However, if I could get some at 115, I felt that would be a good level. So I placed a limit order in at the 115 level, which actually, coincidentally, aligns not only with the Fibonacci level, but also with the point of control for the VPSV and the MACD. Let's pop open the MACD just so you guys can see. You just need a basic MACD here. Now, remember I said you've got to wait for the confirmation on the MACD for the histogram to turn green. Well, there it is, right at the 115 level, like clockwork. You can't make this stuff up. Now, I know there's a lot of TA haters out there that think this is all hocus pocus, but it works for me. What can I say? So let's jump to another chart. Oh, by the way, yeah, Patreon did the alert getting in and accumulating Cardano at 115 because I knew Ethereum was going to skyrocket today, and it did. And I knew it would pull Cardano up with it. So it's already up nearly 10% since that trade this morning. And I think it's going to go a lot further, despite the fact that Cardano and Ethereum aren't really in sync, but that's Material for a separate video. Let's look at Tesla. A lot of interesting news about Tesla over the last couple of days because of that very unfortunate situation in Texas. But as usual, the media and the press sometimes try to incinerate things that they don't understand, like Tesla and Bitcoin and FSD and all of that stuff. So again, be careful what you read. Take everything with a grain of salt. Blaze your own trail. Do your own research. Not investment advice. But here, fib levels like clockwork. We have the 0.5. And you look at all the times that Tesla jumps down to the 0.5. It hit exactly that 0.5 level on the 19th of April. Wick down, bounced up, boom, like clockwork. And now you can see the consolidation of support is exactly the 0.382 level, which is also the same as the point of control from the VPSV. Then you know you got really solid support. And then you just wait and you wait and you wait for the confirmation from the MACD. How easy is this? It's kind of crazy. Let's look at Google. So with Google, here we are again. I'm going to move my camera a little bit to the side so we can get the full picture here. Here we are with Google again. We're going to draw our fib, just to remind you all how to do it. Click Fibonacci retracement, pick the bottom. As you saw from my previous video, a killer opportunity to buy at the 200-day moving average in a previous TA video. Let's pick the bottom here and build our fib level right up to the top. And you can see where it consolidates. You have, what's interesting to note about this is two things. You can see that it's been ranging sideways for a while. It did have this breakout and another breakout here, but you can see that this 0.618 level was like almost like support for a long time. Bounce, bounce, bounce. And more importantly, the 0.382 level acted like resistance. So it was range bound until it broke out. And then you know it's a breakout. I also covered this in another video talking about that Google breakout, and I am long Google. And you can see now it's at the top level and beginning to crash and burn at the very top of our Fibonacci at the 0 level. So maybe that's a sign for traders to think, okay, maybe Google's at a top right now at exactly 2,300. Time to fall back a little bit. So we'll see what happens. Let's look at one final chart today. Is Nvidia. Again, you can see here, we draw our Fibonacci table, picking the bottom all the way to the top, and look at the levels. Again, what you can see from this, the 0.786, a little bit of support, maybe sort of resistance at the 618 level, bounced off the half level, little resistance at the 0.382 level, and then the 0.236 level becomes new support. So it's a handy tool to be able to understand now. If you're looking to accumulate NVIDIA, like I am, I would love to see it down at the 0.382 level because that's where I'm going to enter. And I have my limits ready. I always know my entrance way ahead of time, and I just sit and I wait. And if I don't fill, it's okay. Life goes on. So there we are. Just a little bit of some of the names and how I use the retracement tool to identify optimal levels to place limit orders to enter into positions. I hope you enjoyed that, and I hope you guys are enjoying the great day. Let's look at Ethereum one last time. Look at that for a day chart. Very nice. So anyway, thanks everybody. Let's go and do the conclusions right now. Thank you for sticking till the very end, everybody. And in conclusion, I hope you had fun looking at those charts. It makes it all very real. In conclusion, real quick. Conclusion number one, remember TA is a view into human behavior. Decisions are sometimes made as foregone conclusions, as I mentioned. Sometimes people trade off these levels. That's why I always like to be a little bit above them. So to make sure I get a fill, make sure I get a wick, make sure I can get in before the others. So very important to remember. Conclusion number two, I use it exclusively, Fibonacci retracement exclusively, to bottom fish great names on uptrends. Like I mentioned at the very beginning, these things are running up a hill. It takes a lot of energy and they have to take a breather. And I use the Fibonacci retracement level to identify those areas when they take that breather. So just be patient. Don't ever chase. Wait. Things will come to you. Third conclusion real quick is it helps me nail limit orders, and I place them slightly above the fib levels. I hope I hammer that home enough today. In future TA Tuesday videos, if you look at our agenda that I put together at the very beginning, you can see the check boxes of what we've covered. I just today covered Fibonacci retracements, and we have a lot more to do. And then we're going to start weaving everything together to build a comprehensive story till we get to the stage of right before we make a trigger, we're going to look at a whole bunch of different charts all at once. Okay, so good times ahead. Make sure you subscribe if you haven't already. And a big thank you to everybody in the Patreon community. You guys are so gracious and grateful for all we do. It's so nice to share stuff with you every day. And thanks for being there. And everybody, as usual, watch for scammers. We have a service going in the comments to reduce them, but they're still sneaking in. So be careful who you respond to. I will never, ever share a phone number. I will never ask you to call me. And to make sure you're never scammed, if anybody ever does get you down to that, to calling them or whatever else, make sure you can speak to them face to face. Do not give anybody your money or your details without seeing them face to face, kicking their tires and making sure they're reputable. Okay? Thanks, everybody. Take care. Hit the like if you like.